Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, which means we are 3 days away from the end of the week and end of 2022, trading year at least. I'm Prashant, with me my colleague Sonia and Mangalam. Guys, hi, good morning.
Hi, morning.
Chugging along slowly but surely and getting there, right?
Last few days of the year, right? I mean, do we have our resolutions in place, our New Year resolutions?
Lose weight, I guess. But that's it.
You can't have the same resolution for the last decade, right?
Yeah, I mean, that's
By the way, I can tell you something really cool which I read the other day, and that made me feel nice and allowed me to eat a lot more. They say it doesn't matter what you eat between Christmas and New Year's for your weight. What matters is what you do between New Year's and Christmas. So eat along until the end of this year, and then we can have all our resolutions.
I mean, absolutely. If only it were that simple, right?
He works out every single day,
I mean,
so he can say that.
Yeah, he can say that. You can eat all year through, Mangalam. I mean, no problem at all. But we've got a little bit more in terms of participation from global markets, right? US markets were trading. They were not the day before, but last night US was trading. I'll come to that in a bit. But to start with the Nifty, the pullback continues, which also in a way shows that, as many were saying, that yesterday, Monday was not a one-day wonder, right? It was a ferocious pullback, forceful pullback on Monday, and yesterday was no less. Things came off a little bit towards close, but it was a very good close by the end of it. Now, where are we now as we start this session? The Nifty closed almost exactly, I'm saying almost because it's not point to point, but almost exactly at the 38% retracement, which was 18,130. The closing level, as you can see at the bottom of the screen, is 18,132. 18,130 acted as a resistance. The market sold off quite a bit, in the first 2 hours of trade and then pulled back, and we closed exactly there. What is that? That is the 38% retracement of the fall from 14th of December high to Monday's low. That's the number we put out yesterday morning as well. So we are right there. That's a zone you need to take out and clear out very conclusively and forcefully. If you are able to do that, I'll come to sort of downside levels, which I guess seem more relevant looking at the SGX in a bit. But if you're able to take this out, I mean, the next resistance is not very far. It's about 35, 40 points away at 18,170. Remember that sort of trend line from the lows of June, which is the low in June was 15,183. You draw a rising trend line. It's got 3 touch points, and the market broke that rising trend line on the downside recently. The retest level is 18,170, right? Which is, again, this is all within the next 100 odd points that we are talking about, very near term. Bank Nifty has got next resistance very close by at the 20-day moving average, which coincides with its 61.8% retracement of the same fall. The number is 43,188. That's a level to watch out for. On the downside, there are 2 points. On the Nifty, it's roughly 18,000. That is almost the low yesterday. It is also, retracement of the last 2 days. And on the Bank Nifty, it is 42,400, right? If you get levels closer to these, I think then you perhaps have got something going. You could think of doing something. The SGX, as I said, is indicative of a lower start. So we'll have to, I would say, wait it out. No reason. Chasing the move on the upside or downside straight away. And we get moves later on in the session, as we've seen. US markets were lower, as I was saying. Tech stocks largely under pressure. The Nasdaq was down about 1.4%. S&P was not that much. Tesla is a heavyweight, but the heaviness of Tesla is getting lighter because it's shedding market cap by the tens of hundreds of billions. Tesla down another 11%, 7th straight day of losses. We'll talk more about this. And 2 other points. Yields, in the last 10 days are up 40 basis points. This is the US 10-year risk-free rate. 40 basis points higher in the last 10 days. And oil prices are the other one, which are up 10% in the last 10 trading sessions. Both these are not great news for emerging markets, and I mean the latter, which is oil prices, specifically for India, which is a very large oil importer. So we've had 2 sessions of very decent kind of pullback. No reason to immediately try to buy the dip. I think this level, these numbers should perhaps correct themselves a little upwards as we go into and head closer to the 9 o'clock mark, 9:15 mark. But in any case, no reason to jump straight in right at the word go. Give it some time, let the market stabilize, give you a sense, and then take positioning. The levels, of course, we've left with you. 18,068 is what the SGX is indicative of as an opening. Sonia, hi.
Absolutely. And I mean, for starters, it's going to be a weak start, right? The SGX Nifty is under quite a bit of pressure. And as they say, between Christmas and New Year, waste your time and waste it well, right? So you don't have to trade. I mean, there's no need to trade because there's so much volatility in the market. You can just wait for the new year to begin. Having said that, I thought, since we talk about the here and the now, I thought let me just sort of zoom out and tell you how the year has been. And it's been a really disappointing year for the US markets. I mean, the US markets are all set for their worst performing year since back in 2008. I mean, the Nasdaq is down almost 34%, which is the worst performing index amongst the three. The Dow and the S&P 500 down about 9 to 20% apiece. And Tesla, we were talking about that. It's been remarkable, the kind of fall that Tesla has seen. 70% this year and 40% in December itself. So investors are, sort of checking out of Tesla day after day. And that's important. I mean, all of the auto stocks, in fact, in the US have seen huge corrections, whether it's Ford, General Motors. That pocket is not doing too well. But in comparison, Nifty is not bad at all. In dollar terms, the Nifty is still down, but down about 8% in 2022 so far. And yesterday, the Nifty ended in the green for the second straight day. Once again, money pumped in from the domestic community. DIs bought about 620 crores. FI selling, but not that much, to be alarmed, about 870 crores or so. Nifty is holding above key levels, 100 and 200-day moving average. But there are a lot of things to watch. So on the US front, there are a couple of data points. Tomorrow, there's the pending home sales. There's the Richmond Fed Reserve manufacturing data. And this is important because if there's any indication of a slowdown in the economy or cooling off of the economy, then the Fed may not be too aggressive in rate hikes going forward. So that will be closely tracked. And in our own markets, you have the auto sales that come out on Sunday. I don't know who's going to be tracking it on the 1st, but I'll keep an eye out on the numbers for sure. Two-wheeler demand has actually worsened in December, so just keep an eye out on those stocks. Passenger vehicle, commercial, tractor demand has improved. But all in all, it has been a really disappointing year. So I guess, the true trend will emerge only from the first week of Jan.
First week of Jan or second week once the full flows come in. But, as far as our markets are concerned, the fact that the SGX Nifty is indicating a gap down is perhaps a positive for the bulls because yesterday, the last hour of trade could go all the way, could be credited to the way the Fin Nifty worked. It was the weekly options expiry for Fin Nifty that boosted the market in the last hour. As you can see, the Nifty saw a burst in the last hour, and that was led entirely by the Nifty Financial Services Index. And that was on the cards because for most part of the day, it was below that 19,000 mark. A lot of calls were written, and those calls were unwound as the index shot up between 3 and 3:30. And that was also, because of or led by the fact that last hour belonged to their heavyweights as well, HDFC Limited, HDFC Bank, as well as ICICI Bank. So this was how yesterday played out. Now, to test the market, the true strength of the market, we have to get past the moves that we saw on an expiry day and see whether the dip that the SGX Nifty is indicating is bought into or not. Because had the SGX Nifty indicated a positive start, then perhaps we would have run the risk of running into resistances. Yesterday's up move was classic, exits for both longs as well as shorts. So FIIs unwound a lot of long positions, unwound some short positions as well, as a result of which the net futures exposure remains unchanged at 47% on the long side as against yesterday. The important data point that stood out was that they sold around 3,800 crores in index options, and most of that was directed towards selling puts. And that is important because put writing indicates that there is a fair amount of base in the market. In the last two trading sessions itself, they've sold 1.5 lakh put contracts, and all of them expire tomorrow. So to that extent, again, the SGX Nifty's dip is extremely important. The put-call ratio is at 1.1. Usually 1.2 upwards is where we see overbought zones. So we also have some sort of headroom in terms of the put-call ratio. 18,000 call saw a lot of unwinding. 18,000 put saw a lot of writing. 18,100 put also saw a lot of writing. So that's telling you that the level at which the SGX Nifty opens is an important support zone. Where are the resistances then? The 50-day moving average on the Nifty, 18,219, and the 20-day moving average on the Nifty Bank, which Prashant alluded to as well, 43,188. Two things that stood out in terms of positive data for me yesterday. The India VIX also fell by about 4%. And secondly, the market breadth was firmly in favor of the advances for the second day running.
Okay, well, let's see. For now, the SGX Nifty is indicating a weak start. In fact, a lot of Asian markets are under pressure too. The Nikkei is down about 160 points as we speak. So it's going to be a slightly, difficult start for the bulls. But we'll keep tracking it for you minute by minute. Before we kickstart the show, let me tell you what's lined up in the first hour of the show. Today, we'll get you updates from the markets across the globe. Gary Schlossberg of Wells Fargo Investment will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top stocks for the day. That happens at around 8:30 a.m. We'll also do a fundamental stock analysis with Devin Choksi of KR Choksi.
All right, momentumizers will follow next to decode the stock rally. Post that at 8:45. We bring you the top stock picks for the day from our technical and futures and options experts. At 9 o'clock, Anuj will join in the studios for a quick trade setup. I'll bring you the market laser and things you need to watch out for. And at 9:10, Nimish with the standout brokerage report of the day. That's coming up before market opening. So that's basically the lineup. It's a power-packed one, as always.
Okay, lots to look out for. But first up, let's get you some commentary. We have Rhythm Desai of Morgan Stanley who gives us his view. He says an uptrending profit cycle, a likely peak in short rates in Q1 FY23 and ebbing global macro risks relative to 2022 make the case for an absolute upside to Indian stocks. That said, he adds, India's relative gains may continue on the back foot in Q1 FY23 as we have seen in recent weeks.
Well, some money market views for you. This is Kunal Sudani of Shirin Bank, who says low volumes ahead of the year-end will likely maintain major pairs at familiar levels, within familiar levels. China-linked optimism underpins hawkish hopes from the Fed amid holiday season. He says the 10-year U.S. Treasury yield hit its highest in over a month. For the dollar INR, he expects consolidation to continue between 82.65 to 83 $1 levels.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says the bond market traded in a narrow range of 7.28 to 7.32% on the lack of any significant cues and dull trading on account of the year-end holidays. For the rest of the week, he says the market will assess the impact of the U.S. storms, reopening of China on oil prices and weekly auction demand on the domestic front. He says the 10-year benchmark bond yield is seeing good support at 7.35% and is expected to trade in a range of 7.25 to 7.35%.
I got stuck on dull trading on account of holidays. But despite that, we have a lot of stocks to track today. We'll get to it in just a bit in our special top 10 segment. But let's apprise you of what we're looking at. Jubilant Pharmanova, Welspun Enterprises, Rail Vikas Nigam, Suryodaya Small Finance, Hari Om Pipe Industries, Punjab and Sindh Bank, Indraprasth Gas, Mahanagar Gas are on, are on the back of positive news flow backing them. Indian Oil Corp is the only stock that on our radar that is likely to open in the red.
All right, Gary Schlossberg is with us. He's global strategist at Wells Fargo Investment Institute. Gary, great to have you with us here. Thank you very much. Good to see you still with us all the way into the end of the year, Gary. No holidays,
Still
are you?
hanging in there, thank you.
Or is that
24/7.
Does the background behind you hide the ocean behind or something?
It hides the rain.
It hides. All right, Gary. So how are things looking now? I mean, should we make anything? I was looking at two things. One is the crash in the stock price of Tesla. I was saying earlier that Tesla is not just an electric vehicle company, right? It's I call it talismanic Tesla because of the kind of cult-like following it gets out in people, especially in the US. It's like the beacon for retail shareholders in the US. And Tesla is down 70% from highs now. Is it telling you something about sort of sentiment, not institutional sentiment, but retail sentiment in the US? And what should we make of it?
Well, I think it's indicative of a more cautious attitude as we move into 2023. We have two uncertainties out there. One, the recent backup in interest rates. Some of that, of course, due to China, some of it due to the resilience of the U.S. economy. It is slowing, but the growth slowdown isn't quite as steep as we anticipated earlier. And that's made some people more believers out of a very hawkish approach by the Federal Reserve comments on the inflation outlook. So, and then just more generally, tech in general, with interest rates backing up, that may have spilled over to Tesla as well. So a couple of things coming together. we don't really see a sustained improvement moving through the early months of 2023, given the likelihood that a recession will be developing. And that, of course, is not great news for Tesla or any other consumer discretionary stock in that part of the market.
Okay. Gary, hi, good morning, and just the
Good
last
morning.
few days of the year. So, I mean, it's festive cheer all around, and wish you the best in 2023. Do you think it's going to be a good year for emerging markets like India? I ask because we've sort of managed to get out unscathed, right? The Nifty index is still down almost 8-10% in dollar terms, but nothing compared to what we saw in the US. You think things are going to change in 2023?
Well, we see an erosion in the outlook for India. Certainly no major change, but the delayed effect of interest rates, oil prices moving up. The big story, of course, is China. India has done well relative to China. Longer term, it may continue to do so as businesses begin to pull back, more of a secular trend. But a lot is riding on the outlook for China. There's a lot of euphoria right now. The country, the government has pulled back on that zero COVID policy. But for the next several months at least, there is going to be uncertainty as infection rates rise, what impact that will have on consumers, to some extent on supply chains as well. But I would say over the course of 2023, an erosion in India's standing. Valuations, of course, quite rich right now that could create something of a headwind. But again, I think the operative word is erosion rather than a full-blown pullback relative to other emerging markets.
Well, Gary, good morning. This morning I'm looking at the Hang Seng, which is up almost 2.5%, nearly 500 points in terms of gains, crossed the 20,000 milestone as well. In fact, this month it's been among the top performing indices in the world. After a spate of underperformance, valuations, a lot of people find the Chinese and the Hang Seng markets to be a lot more attractive than India. Do you think we run the risk of flows being diverted to these markets as against India in the near future?
Well, certainly the attractive valuations, China relative to India at an extreme, is a potential headwind for India. But we first have to get through some of the uncertainties, I think, with China. As I mentioned earlier, the reaction to rising infection rates in the country. Will there be some reimposition of controls? Will consumers react to that? And then the property sector as well. Will that come back strongly? What does that mean for commodity prices? Still more questions than answers with respect to China. But the reaction is certainly understandable to an abrupt about-face, certainly more abrupt than we anticipated in China's zero COVID policy. And the gains in the Chinese market to date, I think, reflect that. Going forward, maybe more of a challenge as some of those uncertainties begin to surface in the market.
For cyclical sectors like global cyclicals like metals, could there be more gains here because of, this reopening out of China? And oil, of course, is the other one, right? It's a huge market which has been out of global markets for a while. Maybe they've built up inventories, etc. But eventually, they get back in the oil market, and that means higher oil, not lower, right?
Well, we've seen oil already react to prospects for stronger growth in China. Again, a lot is riding on those uncertainties. That sustainability of the recovery in oil, in particular commodities more generally, will depend on the trajectory of growth in China. The government certainly will provide something of a tailwind with policy stimulus. China is in a better place. Their inflation rate is quite subdued. They don't have that hurdle for policy that the most other countries in the global economy are faced with, certainly outside of East Asia. So we're just going to have to see how that whole thing plays out. But certainly the potential is there for a mini rally at the very least in commodities going forward.
Okay, so there's a potential of a mini rally in the commodity space. So let's summarize this with some of your top picks of the year, right? I mean, which is the asset class you think could outperform in 2023? Which is the emerging market that could outperform? And what would you stay away from?
Well, we're still cautious on emerging markets. There still are some issues out there. Clearly, there is dispersion. The overall emerging market space, their performance will depend considerably on China. But away from that, there are uncertainties in a more challenging global environment, the delayed effect of interest rates, foreign trade perhaps losing some momentum as well. Our general view on emerging markets, while it is improving, is still somewhat unfavorable. We continue to focus on the U.S. market, the liquid stocks, the less economically sensitive stocks, as the U.S. goes through what we think will be a recession during the early part of the year. Healthcare, a defensive sector, low dividend yields, not susceptible to higher interest rates, energy stocks on strong fundamentals, and beginning to look at small cap and some of the more economically sensitive sectors, but not straight away. That will come as investors see some visibility of a recovery as we move through this recession that really hasn't developed just yet.
All right, we will leave it at that. Gary, thanks a lot for joining in, and Happy New Year to you once again.
Same to you.
Have a great one. All right, that's Wells Fargo Investment Institute talking about the market and the way forward. Let's slip into a quick break. On the other side, our entire team will be with us to list some top stocks for the day. Stay tuned. Call this morning, the SGX Nifty is indicating that the start will be in the red, down about 80 odd points. It's been one up day, one down day, really volatile last few days, but 2 days of the green tick in the market. So let's see what happens in trade. First up, we will talk pharma stocks. Ekta's joining in. Jubilant Pharmova is on her list. Ekta, over to you.
Thanks for that. Well, yes, Nirmal Bang met with the management. A couple of important key takeaways is their radio pharma business, which is basically nuclear medicine, is back to pre-COVID-19 levels. They're expected to grow in double digits from FY24. The growth is expected to be via new launches as well as the ramp up of RubyFill, which is basically something which is used for PET scans. And the allergy business, remember that this particular company is the sole producer of venom extract products for allergies in the US. It has over 200 products that it supplies in the US when it comes to allergies. So double-digit growth, healthy margins is what they're anticipating. Generic business is facing headwinds on account of pricing pressure. Margins expected to improve Q&Q with product realizations as well as new launches. And the CDMO sterile injectable business, they're expecting double-digit growth in FY24 on account of a stronger order book capacity addition. Nirmal Bang has a buy with a target price of 432. Maybe we could see some upside on Jubilant Pharmova today.
All right, an upside on Jubilant Pharmova is expected, but Sonal joins in with the update on City Gas Distribution Company. Sonal, what's going on?
Well, it is an old order that IOC had received from the PNGRB just this month itself, and now there's a further update on that. The order was that PNGRB barred Indian Oil Corporation to supply LNG in ADR license to another city gas distributor. Now, the city gas distributor in this case is not a listed entity. It's a player which is called AGP City Gas Private Limited. The PNGRB asked IOC to stop supply to North India, Honda Motorcycle and Scooters India, and the total volumes here were 50,000 standard cubic meters a day. This is in the south, this is in the southern India, this particular project or this particular geographical area that is, and as per rules according to PNGRB, only city gas licensees can supply these volumes. In case of a third party sourcing, permission of PNGRB is required, which apparently Indian Oil Corporation did not take according to the PNGRB order. The addition here is that earlier IOC got time only for like 7 days from 9th of December, and now it has been extended to 8th of January for Indian Oil Corporation to actually adhere by this particular order. So that's the new change, and that's why City Gas Distribution Company is in focus, because it sets a precedent that yes, any other player cannot come in your geographical area and sell certain volumes in terms of LNG or natural gas.
All right, Sonal, thanks very much for that. More stocks with news flow. Vahishta is here with that list. Vahishta, hi, morning.
Hi, Prashant. Good morning. Let me start off with Welspun Enterprises, where there's going to be a board meeting on the 30th of December for the proposal of buyback of equity shares and the declaration of their interim dividend. Now, remember, on the 22nd of December, in the last week, that is, Welspun had completed 9,000 crores of divestment of their highway projects portfolio to Actis, which included 6 road assets. So now there's going to be a buyback of shares. Moving on to RVNL, where the company has received a letter of acceptance for the appointment as project implementation agency for the implementation of the UTF harbour projects in Maldives. And this is a strategic project of the Government of India. The project cost is at approximately 1,500 crores. The Ministry of External Affairs is the awarding entity for this, and the project is to be executed in 24 months. Moving on to Suryodaya a small finance bank, wherein the RBI has reappointed Mr. Bhaskar Babu Ramachandran as the MD and CEO of the bank for a further period of 3 years. And this comes into effect from the 23rd of Jan 2023. Hariom Pipes, wherein the company has entered into an asset transfer agreement with RP Metal Sections Private Limited on the 26th of December to purchase their operating asset with manufactures galvanized pipe and cold roll coil. Now, this unit is spread across approximately 14 acres of land and is located in Tamil Nadu. The purchase is for an all-cash consideration of approximately 50 crores. And the last is Punjab and Sindh Bank, where there's going to be a board meeting on the 30th of December to consider raising 250 crores within 12 months by issue of equities and bonds. Back to you.
All right, thanks a lot for that. Well, here's a quick recap of our top stocks with positive news flow. There's Jubilant Pharmova, Welspun Enterprises, Rail Vikas Nigam, Suryodaya Small Finance Bank, Hariom Pipe Industries, Punjab and Sindh Bank, Indraprastha Gas, Mahanagar Gas and Gujarat Gas, while the only stock on our radar with negative news flow is Indian Oil Corp. But let's go across to our commodities editor Manisha Gupta, who joins in for a quick roundup of all the action over there. Manisha, how is it looking today, and what's been the big story this year?
Well, still looking at the crude oil prices, Sonia, where we have seen prices bear some gains. Yesterday, we did see prices go beyond $85 a barrel as well, but the reports of moderate weather post the Arctic blast has led to some profit-taking here. Also, the U.S. refineries are resuming operations much ahead of their schedule post the freeze there. The support, though, continues from the fact that Russia says that they will curb exports to countries imposing price caps as early as Feb 2023, and they may curb output by 5 to 7% in the first quarter. Also, markets are reacting to China, which is going to end quarantine requirements for inbound travelers from 8th of Jan. So not just crude, but the copper prices also hit a 6-month highs in the New York session yesterday. Asia is holding firm right now. There are hopes of China demand revival, and lower production in Chile and Peru are supportive factors for copper yet again. There also is a statement from Glencore suggesting that the supply shortfall in 2023 for copper could be 50 million tons. That's an additional support coming in.
All right, Manisha, thanks very much for that. So that's basically copper in focus. Commodities, we'll come back to that in a bit. Well, metals were the big winners yesterday, to be sure. Deven Chokshi will be with us of KR Chokshi to talk about market fundamentals and stock ideas. We'll also have Ashok Sharma of Greenlam to discuss the large trade that happened where 1% of the company's equity changed hands. Stay tuned for that conversation.
Welcome back. You're watching us here on Bazaar Morning Call. In case you've just joined in, the Indian market indicates, the SGX Nifty indicates that the Indian market is likely to open with a gap down of almost 80 odd points. The important question is whether that gets bought into or not. For the last couple of trading sessions, the broader market health has been looking good. So let's get talking individual stocks and fundamentals of the market. Deven Chokshi of KR Chokshi now joins in. Deven, good morning. Thank you for joining in. The last couple of days, we've seen, a rebound on a lot of stocks. PSU banks in particular were the ones that bounced the hardest after they fell the hardest in the previous week as well. Is there anything that you like in particular from that pack?
Good morning, Mangalam. Well, I think the PSU banks largely have, I think, few important, developments happened in the last few quarters. Particularly on one side, the liability side, I think, has been corrected. New NPAs, I think, are not happening. At the same time, I think the credit growth in the economy has started picking up. So that is, again, I think, working well for some of the PSBs, particularly the mid and small PSBs, who have up till now been suffering because of, I think, lack of offtake on the credit growth. Here, at least, I think this particular situation is getting corrected for them. And I think more importantly, most of these PSBs are available at a valuation which is quite, attractive enough. The next trigger, and which is anticipated, could be further consolidation into the PSBs, I think, going forward. Maybe if the budget can lay down the roadmap for that, I think that would be the next trigger, I think, for some of the PSBs to go up. So on one side, valuation remain attractive. On the other side, I think the business conditions, I think, improving for themselves and balance sheet getting repaired, and the possibility of consolidation. All these 3 or 4 triggers could possibly drive the prices of PSBs in the interim period. So one can selectively look at some of the reasonably larger size PSBs for the participation into this particular possible rally that we are talking about.
Devin, hi, good morning. So the worst performing stocks this year have been the large cap technology stocks, right? Whether it's Wipro, Tech Mahindra, HCL Tech, all down about 20 to even 50%. In a very long time, I don't think you're going to get this chance to buy, Tech Mahindra and Infosys 40, 50% cheaper. Do you think this is a good time to be at least, nibbling into the IT majors, or do you think you will get better levels?
Hi, Sonia. Good morning. Definitely, I think this is one good opportunity as we see it, because most of these larger companies, particularly the likes of TCS and Infosys, have been signing the contracts for 5 to 7 years of some of the large customers, which means that they are having the visibility of revenue over next 5 to 7 years. Even though on a larger base, I think they are having the program which is 15 to 17% kind of a growth, which is still fair according to me. And in the environment like this, where most of the businesses are basically spending money on IT, largely to create the consumer interface, having created, I think, the enterprise interface in last 20 years, I think now the challenge for most of the corporations is to basically create the consumer interface. And that is what I think Indian IT companies are basically winning the contracts of larger customers. In my viewpoint, I think this kind of price correction, for whatever reason, largely technical, I feel that I think it is better to buy this kind of companies into your portfolio for a reasonably decent set of appreciation. At least I think 15 to 20% kind of appreciation can be ruled out in some of the larger names, particularly the likes of TCS and Infosys, where situation remains extremely favorable to them as far as I think the global business outlook is concerned.
Devin, metals were all the rage yesterday, between 5 and 7, 8%. JSPL, Hindalco, Tata Steel, Nalco, and so on and so forth. Is there more here? Do you think this is just pure momentum, sentiment, uplift? Maybe it is, right? But these uplifts, this push can extend sometimes with meaningful rewards. Do you think this is one of those occasions? Metals.
Yes, Prashant. Well, I believe that I think leave aside the technical reasons for a while. I think as far as I think the metal commodity stocks in the market is concerned, but largely the demand scenario for metal is showing signs of improvement. The China factor I think is playing a little positive now as far as sentiments are concerned. After opening up China, probably I think we could argue that in 2023, in the first half, we would see only the upside improvement into the Chinese economy. So that is one aspect I think which is supporting the argument for metal. That would be more on the consumption side as far as I think the China business goes. But more importantly, when we are talking about renewable as a major theme in the global market, where majority of the countries, including the Western world, will be significantly investing their new money in building the renewable capacities, the metal would be in demand. And at this point of time, largely because either you want to create the solar panel or the wind turbines, or for that matter, hydrogen tanks. Whatever you talk about, I think the metal would be in demand given the kind of demand for the renewables which will happen. So in my viewpoint, I think the metal should hold the steady regime hereafter. Fortunately, the crude oil prices are remaining in a disciplined range of $75 to $85 to a barrel. And that is where I believe that I think the argument for metal commodity stocks on the margin front also remains in favor. So from that perspective, demand perspective, as well as from the margin perspective, both these aspects are, I think, arguing that metal stocks should remain steady to improved wickets in coming 6 months or so.
All right, Devin, just hang in there and wait by. Maybe you want to be listening to the conversation that we are going to have right now. The first corporate on the show, we have Greenlam Industries. The stock actually gained nearly 5% in yesterday's trading session. This after a large block took place on the stock where a little over 1% of the company's equity changed hands. Now, the participants weren't revealed in the bulk deal data yesterday on the exchanges, but Nimej in his dealing room chatter did allude to the possibility of a domestic mutual fund being a likely seller. So to discuss this and more, we do have with us Ashok Sharma, who's the CFO of the company, joining in. Ashok, thanks a lot for joining in. Could you give us a sense of whether it was the domestic mutual fund who was a likely participant in the large trade? Could you give us a sense of where the promoters bought, or who were the participants basically?
Good morning. Thank you for having me on the show. And we don't have any idea who's the seller. And as far as I can say, that promoter is not the buyer. We don't have any idea about the buyer also.
Promoter is not the buyer, and you don't have any idea of who the seller is. At any point in time in the near future, are promoters looking to perhaps raise their stake in the company?
As of now, there is no such plan.
Okay. So what is the promoter stake currently, and what do they plan to keep it at?
Promoter stake is around 52%, and they plan to keep it at that level.
Okay.
Right. A bunch of HNI shareholders also hold stake in the company. There's Akash Vallabh Bansali, there's Ashish and Akhil Dhawan. Then the funds we spoke about, HDFC Mutual Fund, DSP. Asian Paints promoters, Jalaj Dani and company, also hold about 10% stake in the company. I mean, was there any conversation whether it could be any of these funds, etc., or HNIs? I presume that the Asian Paints guys did not sell because they got allotted via pref. Just wanted to know. You would have gotten the sheets, right?
Not as of now. So we don't have any idea. And out of this name which you told, first three name holds our stock since very long in terms of that. And of course, the DSP and the Mr. Dani has joined recently in past 1 or 2 years only. So we don't have any idea as of now in terms of who the seller is.
So you told us that, you said that promoters have no plans to raise their stake further, plans to stay at 52%, but you have no idea whether they participated in this particular trade. So you're not, you don't have any understanding of that, is it?
No, I have the idea in terms of promoter. They have not participated in this.
Oh, they haven't participated. Okay.
All right, fair enough. Mr. Sharma, good morning, Prashant here. Now, how is business doing? Because there are concerns that maybe, while penetration levels and organized to the organized market taking over unorganized market share, those themes are intact and may run for many years. But because this has been such a good growth area, and because of these factors, there is a lot of expansion which is coming through from organized players in areas like particle board, etc. A lot of expansion. So competitive intensity has gone up quite a bit, and hence some believe that margins, the story for margins is kind of behind. Margin improvement perhaps will not play out. Can you talk to us about that? How do you think about this?
Sure, Prashant. So first of all, what you are talking about is MDF, not the particle board. There are a lot of players who are coming in MDF, not in particle board. And just for clarification, as of now, we don't have presence in either in particle board or in MDF. We have announced a project for the particle board, which will come towards the end of next financial year, that is FY24. So competitive intensity is going up in MDF. In particle board, apart from us, there is only one player who is announced. So we don't feel that there will be much competitive intensity in terms of that. In terms of business, the existing business is growing. Of course, the growth is not as much as high as it was in the previous year. Previous year, we have grown by around 40%, but this year also growth is there in comparison to previous year.
Right. Ashok, how has the third quarter been? And I ask you this because the last time the company joined us, they had given us targets for the year. It was 25% growth for the top line for the entire year, with margins improving to anywhere between 11.5% to 12%. Do you hold on to those numbers? Can you do better, or maybe you will undershoot?
I think it will be in that range only, 20-25%, and the margin also in that nearly in that range.
So what does then that mean for your FY24 growth? Because you do have a lot of capacities coming on board.
Yeah, FY24, the two new capacity will come on board, and the Ahmedabad plant also, which we have acquired in August, September, which has started commercial production. That also with the full capacity will be available. So we are hoping to a good good next financial year, and the growth will be in that range. What we are 25-30% growth can be expected in the next year.
Okay, so growth of 25 to 30% on the top line, right, is what you're talking about next year?
Yeah.
Okay, so that's when your two new capacities come on board. What will this take your total capacity to by the end of FY24?
So in terms of laminate, that will take our capacity to around 24.5 million sheets. In terms of that, plywood will be a new capacity, that is 18.9 million square meter. That is a new capacity, and rest all capacity will remain the same.
Okay, and will this in any way help you in terms of better operational performance as well? Can you get to sort of 11-12% margins anytime soon?
I think next year will be the first year for this capacity. So this has to reach up to a certain utilization level. So we are not expecting any increase in margin at least in the next year. But going forward, yes, it will reach to that level which you are talking. First, being the first year, we are not sure about that what level of capacity utilization we will have.
But you are likely to get some support from the turning around of the veneer business, right? You've guided for profitability in that business by the end of this year.
Yeah, we are expecting that.
All right, Ashok. Thanks a lot for joining in, giving us all those details. Wish you good luck, though we will await the details of the bulk deal data that will come by, perhaps looking at the next shareholding pattern that will be revealed to the exchanges as well. Wish you good luck for business. All right, so that is the management of Greenlam Industries holding on to that 20-25% growth guidance for this year, alluding to FY24 with a 25 to 30% growth with margins between that 11 to 12% range, and confirming that promoters did not participate in the bulk deal yesterday. Who were the sellers, we will know shortly. But Devin, your thoughts on this business?
So we believe that the size matters, and I think this company has systematically created the manufacturing base, which is basically into different regions along with the distribution points. So that is where probably I think this company is having a strong claim about expanding, I think, with a 25-30% kind of a market growth, which is, I think, sounding positive. Only challenge here in this business is there is enough amount of competition, and I think that is where probably the margins are always remaining under attack. So that if somebody can sustain properly, I think that is going to probably drive along with the volume, the profit growth as well. Since we don't have the coverage, so won't be able to give any specific on the financial numbers at this point of time and the view and the recommendation thereafter.
Okay. Wanted your thoughts also on, some of the larger stocks that you cover. One of the top gainers this year has been M&M, which is a growth of almost 50%. It's now, in a few days from now, M&M is going to launch its first electric SUV, the XUV 400, and there's so much hype around that. Do you think there's more to go on the upside at this 1230 price? Is the risk reward still favorable?
So I think an important point among the new launches that this company has done, they've been able to corner significantly large amount of orders, I think, and that is key point, which gives them kind of a supply situation for next 6 to 12 months as far as I think the revenue book is concerned, which is a fairly good and comfortable kind of a position as far as the books are concerned. In my viewpoint, I think the key would be to introduce a newer range of vehicles and keep attracting the customers to that. The new customer segment which is emerging definitely I think wants to go for the newer vehicles, and that is where they're probably I think taking over some amount of market share from even some of the established players. Where the stock has had a good run up, I think, so from the price point of view, whether you would have the similar kind of a headroom which one has seen in last 1 year, I'm not too sure. But yeah, a steady rate of growth should be possible given the kind of new launches, given the kind of deliveries of existing orders and the financial performance. So I think one can expect steady return from this stock in coming year.
Okay, I do want your thoughts on some more stocks, but let's get straight to that in a bit. Just hold on, Devin. Momentumizers is our segment that we're going to talk about right now, and Mangalam has a momentumizer on his list. Mangalam, what are you looking at?
I'm looking at Kitex Garments because yesterday, we did see a fair amount of action on that stock. It was up almost 14%. In fact, this week itself, Kitex Garments is up 18%, though it has been an underperformer. So the last couple of days is the time when we saw momentum building up, because this month it's up 3.5%, this year just about 3% and from its 52-week high, the stock has actually corrected about 35% as well. Yesterday was important from a technical standpoint as well because it crossed the 50-day moving average of 197, and it did so with a lot of volumes actually. Yesterday's volumes were 20 times what we've seen in the last 10 days on an average itself. And were they marked for delivery? A large part actually. Yesterday's delivery volumes were 2.5 lakh shares, and that compares with 3-month average of 40,000 shares too. What are the levels on the way up to watch? Now the stock is at around 200 rupees. 210 is where the 100-day moving average comes in, and 228 is where the 200-day moving average of the stock comes in. I was looking at the exchanges for any sort of notice, etc., that came in yesterday post-market. The company told the exchanges that insiders of the company, and this is regulatory, requirements from companies to do that. They've said that insiders are prohibited from trading from Jan 1st until 2 days after the third quarter earnings, and that's what usually regulations suggest for all the companies. So just before that, maybe some action taking place on the stocks. So put it on my momentumizers list.
Okay, Devin, any thoughts here? Kitex Garments, have you either tracked it in the past, or are you looking at it now?
Not really, Sonia. Not been tracking this company.
Right. Okay. No stress there. We'll do one thing. We'll take a quick break on that note. On the other side of the break, we'll have our technical guests, Mitesh Thakkar and Sudarshan Sukhani, joining in. We'll get some trades for the day. Stay tuned.
Back. There's 12 minutes to go for the pre-open session. SGX is indicative of an 80-point lower start. Sudarshan Sukhani and Mitesh Thakkar are with us for their perspective on things, trading setup, trades, etc. Gentlemen, good morning. Good to have you, as always, with us here. Sudarshan, so once again, pullback continuing, and the market, in a way, ending at just around that 18,130 kind of levels, which is, the first kind of retracement of the fall that we've seen from the 14th of December. What's your sense? I mean, if we get an 80-point lower start, closer to 18,000, what should one do?
Good morning. See, for the last 2 days, we have been buyers in this market, and the trades have done rather well. I think I should not push my luck. Markets are likely to be choppy today, and there is no sense of direction. We have started some kind of an relief rally, and it's difficult to say at what point this rally will end or whether it has actually ended yesterday. That's not easy. In any case, after 2 days of up moves, the markets tend to pause and consolidate, even in an uptrend. So today is a no trade day for me. The markets are likely to be choppy and unpredictable and random. It's so much better to sit it out and watch the market action as a bystander. And the same applies to the Bank Nifty, although the Bank Nifty has been slightly outperforming. But I would suggest that you buy the Bank Nifty only if you have a very sharp dip. Otherwise, like the Nifty, stay away.
Choppy, unpredictable and random are the adjectives you describe for both the Nifty and the Nifty Bank. Mitesh, would you agree? And if not, would you be brave enough to buy the dip?
Good morning, Mangalam. I've not been on the buying side for the last many days. And in fact, the bounce back, we've kind of stayed away, selling call options instead. My belief is that this last 2 days of up move is more of a pullback rally. And once we get signals of this pullback rally coming to an end, I think we would want to take a positional short. Or if this pullback kind of extends to 18,200, 250 zones, that is the level which I want to be aggressively short at. I believe that the recent lows of 17,800 could be revisited, maybe even mildly exceeded on the downside. So have a slightly negative outcome on the index, and therefore will not want to buy the dip.
Okay, so stay away, stay cautious, don't buy the dip. You can wait a bit. That's the word coming in. Mitesh, good morning. What about individual stocks? Do you do the same thing there, or do you see some conviction in buys and sells?
Well, today I have a mix of buys and sell calls. On the buying side, a couple of metal names, which is Jindal Steel and Power and Hindalco. Jindal Steel and Power, I would recommend buying with a stop at 564 and would look for targets of around 600, while Hindalco would be a buy with a stop just below levels of 465 for targets of 490. And on the sell side is Lalpath Labs. Recommended stop loss at 2270 or just above that for a target of 2200. And MGL, that's the final sell call with a stop at 860. Look for shorting this one for targets of around 820.
So Darshan, do you see any clean trades in individual stocks?
No, I think the trades are mixed, just like Mitesh has also said. And Sonia, you summed up so nicely whatever I and Mitesh had said, so that's good for you. It's congratulations. Now, L&T is a buy. L&T is a buy because the stock has been outperforming, and in a choppy market, something goes up. I hope this one goes up. Keep a stop at under 2,000. Mindtree is an intraday short. The stock has been falling consistently. It's not participated in the two-day rally. Buy as sell short intraday only with a stop above 34.54, 3454. And we are all seeing the same charts, and this also tells you how market breadth has narrowed. Just a few stocks are giving opportunities. Even for me, Dr. Lal Patlab is an intraday short with a stop over 23.14. Mitesh also had this. And ONGC is a buy. This is a positional buy. It's an intraday buy. I think ONGC should significantly outperform the market. For buy will stop under 142.
Okay, all right, Sudarshan, thanks for that. Well, Devin Choksi is still with us. Devin, you know, there is an upgrade that has come in on Page Industries this morning from MK. They have a target price of 50,500, and they say that the main reason for the upgrade is because of the stock correction. So they're looking at it as an attractive buy. The stock is down 20% from the peak in October. You know, some of these wealth creators have corrected quite a bit. So do you think it's worth a buy now?
Yes, Sonia. So I think the business model remains as strong, and I think probably all the financial numbers also remains, I think, quite convincing. Even if the stock prices did not perform, probably I think these numbers haven't deteriorated as much. So to a greater extent, I think one would have that conviction that the business model would probably produce enough amount of growth going forward as well. Whether one would have the similar kind of appreciation in the stock price, I think difficult to say for me at this point of time, since we don't have the stock under our active coverage, it's only in soft coverage.
Okay, all right. Devin, any thoughts, and I don't know if Mitesh is still with us, but any thoughts on these sugar names? I mean, they're firing, not consistently, but when they fire, they go up 8-10%. Dwarkesh, Dhampur, Ugar, Poni. Yesterday was a case in point. Praj went up quite a bit yesterday. Any thoughts?
So most of the sugar stocks are traders' paradise. So generally, I think they basically trade around in this particular stocks. But fundamentally, if you look at, I think the changes which are happening, which all of us would endorse. On one side, we are having higher amount of ethanol demand, which is happening in 2024-25. From current 550 crore liters, I think it is expected to go above 1100 crore liters of ethanol demand. And that demand is basically going to drive steady performance for the sugar companies. Up till now, sugar companies have remained, I think, quite cyclical as far as I think their business is concerned. But with this ethanol demand, I think, coming up, and with this business model, I think, steadily emerging, including, I think, allowing the sugar companies to produce ethanol directly from sugarcane, I would think that this is where probably, I think, a game changer move has happened in this particular industry. So yes, I think at least I think visibility for next 2 to 3 years I think remains absolutely clear, and some of the larger players with higher amount of focus on ethanol and the capacity creation would definitely I think remain in limelight going forward as well. But I think the sector course, as I said, I think is most traded, as a result of which you are likely to see some kind of volatile or sharp moves ups and downs in the market price of these stocks. Stay with selectively larger companies as far as I think the investment approach goes into this business.
All right, Devin, thanks very much. Good speaking with you. Appreciate you joining us with that. Mitesh, any thoughts? Anything coming up as a tradable name? Devin called it traders' paradise, but you know, what kind of traders? Winning traders, losing traders is the question.
By the way, it can also be traders' graveyard sometime, you know,
That's what I'm
the
saying,
sugar
right?
space. The kind of, I mean, people have really burnt their fingers in this space in the past, if you remember.
Yeah, absolutely. I mean, they're, but you know, goes up as a sector, comes down as a whole. Mitesh, anything?
So, Prashant, I've been liking Balrampur Chini, and we have had some trading calls in the last few weeks. Right now, I think it's consolidating around the 200-day moving average. Around 380, I would think a long can be taken with a stop below 370, and a target of 420 on the upside can be looked at.
Just be mindful of longs on or any sort of trades on Balrampur Chini, because it's also entered the F&O ban. So whatever trade one's taking, we'll have to square off by the end of trade, because carrying over would attract a hefty penalty.
Absolutely, that's an important point. Thanks for that, Mangalam. So Balrampur in F&O ban, so take trades accordingly. Mitesh, you know, stay with us. We're coming back. We have to take a break, though. We are back with a pre-open session, which is 4 minutes out. Amit Dikshit of ICICI Securities is also going to be joining in to talk about the big metals move we saw yesterday. 4%. China reopening, of course, is the big one, which is driving these, lifting all these boats, the metal boats. So that's coming up in a bit.